Thank you very much for your attention. And in this webinar, we will go through some FX pairs, and also we'll take a look on some stock indexes which are trading near all-time highs. Today, euro dollar is higher. We can also see some nice bounce on crude oil after Russia cut production for 2000 until March of 2018, I think, and also after this nuclear test from North Korea on Friday. So it looks like that higher crude oil has an impact on euro as well. So firstly, I want to take a look on the euro, or actually on dollar index. It's even better where we are standing right now. Well, I was looking last week for potential only temporary pullback. I was expecting a reversal to the downside, but I thought it will prove corrective. So far, we can see that price action is very sharp to the downside, so not really satisfied with this move. It does not fit into this type of a wave to be or any other corrective pattern, okay, corrective lag. So actually, I'm already observing this second count here on the right, which is actually showing us that we can see another low to make this wave see an ending diagonal. Now, this pattern is even more powerful one, which means that dollar index could turn higher in the second part of this year. And I still think that this will require some time before tradable bottom will be seen, unless we see a very strong reversal today during the US hours. So we still have some time to wait, and definitely it's not a very good price action for now to trade, okay? Because this count on the left is still correct, and this count on the right is also valid. So what I want to see is to get more price data and confirm one of the count. But I really like this second scenario, okay, that we are in an ending diagonal. But nonetheless, the whole cycle from 2017 high is still only in 3 waves, okay? It's a corrective move. We have personality of corrections because of overlapping structure. Also, if we take a look on a monthly chart, I see prices in a 5th wave, but I see some fib levels much higher from here. Also, I cannot count 5 subwaves up within wave 5. As you know, wave 5 is a motive wave, which means it can be an impulse or it can be expanding or maybe even ending diagonal, okay, where overlaps or of subwaves within wave 5 are allowed. But for now, I can see only if I select this tool here, just real quick. So actually what I see here is only wave 1, 2, 3, wave 4, and expecting wave 5. So I'm looking for more upside for sure. Also, this means that euro dollar could see more downside as well. Also, as I said, the price action is not really aggressive to the downside. It may turn out to be aggressive, but for now, based on what I see here on daily chart, as I said, because of overlaps, and if we consider that just ignore the biases and focus on the price, and even if you ignore the wave counts, there's an uptrend in progress. Okay, so ask yourself, what are the chances that the market is topped out here and that we'll see a very strong decline? Okay, or if you will stay with the trend and mark this as a temporary correction like any other pullback from the last 7 years or so. So definitely there are odds that market will continue higher rather than top out here, especially if we consider that daily chart, as I said, is not showing a 5 waves of decline yet, okay? If we would have a 5 waves of decline, then I would turn bearish. But since that's not the case, and because also, as I said, there's no 5 waves up within wave 5, I think that bullish pattern is still uncompleted, which means that I will stay on the bullish side. But as I said, I'm tracking 2 counts and expecting this wave C to show us confirmation of a low. And confirmation, as you know, if you're familiar with these corrective channels, would be when market would breach the upper trend line. And so far, we are well below this line, okay? However, I think that wave C, as I said, will bottom either later in May or maybe already show us some bullish case this week. But this is my invalidation level here. Wave 1 is at, let's say, around 96. Okay, so definitely there is room for more downside then turn to the upside. Okay, so I'm still bullish overall on dollar index, but I think that we are just in a corrective phase. So if we take a look back on the euro dollar, then here also I will be looking for more weakness into this wave 5 of C. Also, let's take a look at this wave first leg, wave 1, which was quite big. Then we had the wave 3, also very sharp. Then we had the wave 4, and it looks like that wave 5 is, for my taste, is just too small. Okay, so I think that there will be something bigger behind this bearish move that will come by the end of the year. Either we are still maybe in this wave 4, okay, or already in wave 5. But in both cases, I think the tier weakness is not done yet. So that's firstly my primary count that we are now in a wave 4. I also labeled this as a double zigzag to the upside. Let me show you. So ABC for W, then you have wave X and another ABC to the upside. Also, there is a chance that wave 4 has finished here, okay, not here as a triangle. But again, I think that upside will be limited, and since this leg is very sharp, also impulsive on lower time frames, I would not be surprised if we retest the highs in May and then turn to the downside. I would pay attention to this upper channel resistance line around 1.1050. Okay. Also, these same levels, 1.1050, would come in play at this. If this is maybe an ending diagonal, we'll see as shown on second count. Also, this trend line, upper trend of an ending diagonal, comes in around 1.1050 as well. Okay, so what I think is that despite euro dollar strength, I would not trust this move. I think that any break to a new high will be a fake one and could be a limited upside. So a strong reversal may occur, even in much sharper manner if we consider that this is an ending diagonal, which is normally slow. It will trick you because you will see a nice move to a new high, deep reversal for a wave 2, so traders here will turn bearish, then you see a break to a new high, they will turn bullish, then you see a wave 4, markets go sideways, then another push to the upside, they traders think, yes, that's it, we are going higher, but actually you have a fifth wave. So a reversal to the downside, when everyone will give up in the few, that's when market could make some very strong moves. Okay, so keep an eye on this development. Also, we will take a look on cable. Cable is also seen still ongoing on a bigger scale. Here I have this monthly chart, sharp fall for a wave A, 3-wave move for a wave B, and now you have a 5-wave decline in progress for a wave C. We see some nice recovery following this Brexit outcome, and we see this is a 3-wave move on a lower time frame chart. So this represents wave 4, I believe. We are in wave A, triangle B, and wave C move to the upside. Now, this triangle for wave B is very important because if you think that that cable is turning bullish, okay, then if you would label this as a wave 2 and expect strong rise for a wave 3, then this count would be wrong because we know the triangles cannot occur in wave 2 position. So I think that this is a wave B, and the breakout of a triangle occurs is actually a final leg within a larger trend. Okay, so this is current larger trend, larger pattern, a 3-wave recovery, which means this wave C is a final breakup of this structure. So be aware of a reversal to the downside over the next few months, and this goes in line with the dollar index and euro dollar as well. Also, we are here at the resistance of wave 4 of 1 lesser degree. So first resistance was actually here, okay, the starting point of wave 4, and then you have the upper point of wave 4. But I would not be surprised if this upper side would not be reached, because this fifth wave, as you can see, was quite aggressive and big to the downside. Okay, normally wave 3 will be much more extended than fifth wave, but when fifth wave has a big size as well, then you may not see a retracement back to the area of actually back to the termination point of wave 4. But this wave 4 resistance levels can be found either in the middle of this of the previous pattern or at the lower side of the fourth wave. Okay, so I would watch out for this resistance zone. We are from around 1.3 to 1.3150 to be a top. Okay, but on short-term charts are also very important to identify the full structure for wave C, which is needed before you can look on the other side. Actually, I identified this reversal last week. We made also a video for our members identifying that either we were, if you take a look back, because firstly we identified as a triangle, and then we also came out with this ending diagonal, and we have picked and then turned to the downside. So actually there are first chances that we are going lower. Okay, but if euro will continue pressing to the upside today and dollar index to the downside, then cable, as you know, will also retest the highs. That's why I love it here for clients that alternate scenario should also be considered wave 4 at last week lows. Okay, but for me to identify and confirm that we are going to the downside is actually a 1 hour time frame chart. Now here is this structure which seems to be very clear. It's wave 1, wave 2, wave 3, wave 4, and wave 5. So actually this could be a start of a new bearish cycle, or it can be end of a wave C of a flat formation. If this would be wave 4, okay? And actually what really matters is this current recovery. It's in 3 waves, A, B, C. Zoom this in. A, B, C move right into 61.8%. So actually that's a do or die zone. If we'll see a break above it during the US hours, then definitely this would more fit into an impulsive recovery. But if we see a reversal and back to 1.2880, which I marked as a bearish level, then this should be confirmation that this market is going to the downside. Also keep an eye on this trend line. This is an hourly trend line connected from wave 5 low, wave B low, and usually when this market breaks this trend line, it's the first indication the top has been formed and that we are going lower. That's not the case yet, so it's very important to wait on this aggressive sell-off to confirm that ABC is done. But ideally, 1.2880 would confirm that we are going much lower. Why? Because in such case, you would have already a deep overlap with this wave P. So let's assume that there is a possibility to count this as a wave 1, 2, 3, 4, 5 to the upside. Actually, we have time. I can level this count. Another cable here. We are looking at the hourly chart. So let's assume that we go higher. Okay, and you have 2 wave counts, wave 2, 3, 4, and wave 5, okay? So this is also valid formation, this one on the right, as long we are trading above this invalidation level, okay? 1.2892. So for now, when it comes to trading, actually you need to understand that both sides of the markets needs to be considered. So it's very important for you as a trader to wait on confirmation before you take a trigger, okay? Because otherwise you may risk too much or too early. So what I would like to see is an overlap, okay? A deeper overlap with this wave 2 or wave B, if you say, which means I want to see a break below 1.2892 to confirm that this count on the right is wrong, okay? And that would increase odds of this first possibility, which shows an ABC rise. And then I would definitely consider idea that we are going much, much lower, definitely below this fifth wave, which, as you know, could open then or make a room for much lower levels, especially if this ending diagonal would be confirmed by even better price structure. Okay. So cable, watch out for these intraday developments, which will either confirm that the top has been put in place, or that we will see a new high and then a reversal to the downside from 1.3, maybe 1.3, 150. Okay. Now let's take a look also, which one is very interesting on a longer time frames is dollar CAD. Dollar CAD is actually moving to the upside for the last 12 months actually. But notice that this fall from 2016 highs was very aggressive. Okay, clearly it fits nicely into an impulsive structure, and always when you see a 5-wave rally from the low or a 5-wave decline from the top, it should be an alarm that something is changing, something is going on the market sentiment. And I think that this first leg down was indication that top has been put in place and that we could resume to lower levels. Also, the next thing that it's important is that you have a characteristic of a counter-trend price move against the previous 5-wave decline. And clearly that has been the case. We can see a lot of overlaps. You can see that bulls are higher, but they appear to be very, very tired. They are not strong at all compared to previous bearish price action. Okay, notice that this decline from January 2016 to April 2016, which means what? 4 to 5 months, we have seen a very strong and extended move, while we are now recovering for, so May 2016, and now we are also in May, so we are now recovering for 12 months, okay? So clearly this is perfectly representing a corrective personality, a move of a counter-trend price action. We are also trading within this uptrend channel. But as long as we are trading below the upper resistance line, it represents that this is a corrective channel. So I'm expecting a decline either from current levels or from another test of this upper trend line. Also, the fib levels of this second zigzag, actually that's a in 7-leg recovery ABC, then you have a wave X and another ABC movement. And notice that this wave C traveled the same distance compared to wave A measured from a wave below. Now that's a very important white line as well. Wave C will normally be very similar to wave A in distance, not necessarily in price structure. And as you can see, we have seen a nice reversal for the last few days, but still only in 3 waves. We were looking for this decline even on an intraday chart, identified this recent pattern that confirmed the top. This was actually an ending diagonal. It was not a perfect shape, but still we had these 3 legs in each of the wave within this ending diagonal, which suggested that top can be approaching, because these overlaps actually confirm that bulls are not that strong. Okay, and we have seen the first leg very sharp to the downside. After this trend line of diagonal pattern was broken, then we have seen some tricky price action, which identified as an expanded flat, and now we are continuing nicely to the downside. So we are in a wave, either in a wave C or wave 3 to the downside, but what really matters is that we need 5 waves lower. So for short-term structure, I think that we are going to see lower levels here for dollar CAD. Normally, when wedge pattern is completed, you would expect that price will retrace the whole structure of this wedge pattern. Okay, so actually, because this first leg was deep, I'm looking at 2 levels. The first one is 1.34, which was actually wave 4, swing low of the previous uptrend, and also pay attention to this wave 2 swing support. In either case, we have room for another 100 pips drop, if not more. Okay. Also, crude oil is definitely turning sharply to the upside and is helping to get stronger. So if you take a look on crude oil, I know that crude oil, however, may not go straight to the upside, but on weekly chart, okay, my weekly chart suggests that we completed this 5-wave decline and that this is a reversal pattern. Also, I'm tracking these potential head and shoulders here. Okay, so left shoulder, head, and our right shoulder can be forming. And here on a daily chart is also interesting structure. We already have an overlapping price action to the downside. Okay, so you cannot count this as a 1-2, 1-2 because sub-wave 2 was much deeper and bigger compared to this wave 2 of a higher degree. So that's why I would mark any bearish impulsive counter as wrong, and I will look for this few ABCX, another ABC to the downside is expected to unfold. So I expected this bounce, this rally for which can be wave B, but this week's price action will be very important to confirm whether we go even lower for wave C or are we already completing this wave B to this recent low. So on the 4-hour chart, and why I'm not sure what's going on there yet is because we have 3-wave rise from my 05 lows. Okay, we are also at this resistance level right now where I was looking for prices to be hit at 49.30. So actually, I think that this current development, development in the next 12 hours, maybe 24 hours, will be very important. Either this resistance will hold and send prices to the downside with impulsive sell-off, or we will see just continuation higher. If we will see a transformation from current ABC recovery into a 1, 2, 3, 4, 5-wave movement, then as you know, as I said already earlier, this should be an important signal for you that market has bottomed and that we are probably going much higher. But at this stage, I would be very careful with turning bullish too much too soon. Okay. Also on the hourly chart here on the right, what I see is that we have a nice 5-wave movement from my lows. We have waves 1, 2, extended wave 3, wave 4, and now also quite extended wave 5 into some nice fib resistance levels here. Notice that I take first in blue, I take the whole distance through wave 1 through wave 3 and projected it from the end of wave 4. So I actually took 61.8% of this lag, 1 plus 3 from wave 4 low. Then I also took 200% extension of wave 4. And then I also have 261.8% extension of this wave B around that levels. Okay, and we are also at this resistance of a previous wave 4. Notice how the market has seen a lot of noise here, ups and downs. So it looks like this 49. Actually, it's just below 50 level. It's also very important. Also, oil futures contract will roll or expire tomorrow, I guess. Well, actually, in this week. So definitely, this could cause that traders that are still long on this current futures contract will book some profits on this after this rise, and this could cause some weakness on oil prices as well. So definitely expect at least a free wave to the downside from 49 up to 50 level. Okay. Now let's take a look on next market, which will be actually the S&P 500. So the S&P 500, here we have a weekly chart. I think this price action on the weekly chart should be very, very important for long-term investors because it shows that we can be in final stages here of this uptrend. We are in a fifth wave, but normally fifth wave in stock markets and commodity markets will make an extensions. Okay, so despite the fact that we are trading at some interesting levels here that could already represent first resistance levels for a fifth wave, I think that we will get some mania cycle, which means a very strong rise before we may look for a top. Okay, so for now, I would stay bullish on stocks and expect the upper channel line to be tested. So this is still what 200 or 140 or 150 points away. And as I said, we may see an extension. So in a lot of cases, this upper trend line will be spiked out. But when the market will turn back into this channel, that's when you may say the top is in place. Okay. Also, you need 5 subwaves within this wave 5 before you may look for a top. And if you take a look on a daily chart, we'll zoom this in. That's not the case yet. Okay. I have labeled wave 1, 2, then you have wave 3, and expecting now wave 4 to remain in progress. We have seen a break to a new high, but push or rise is not so significant. So I'm considering the idea that we will see more complex wave 4, either flat, maybe even a triangle. Also, let's consider the fact that, if I zoom this back in, let's consider the fact that this wave 2 has been in progress for 2 months, okay? And if you consider that wave 4 has finished here, okay? If you would move wave 4 here, then this would be for only what? Half of a month, 2 weeks actually. So for my experience, I know that fourth waves will be much more complex and maybe even bigger than second waves, okay? Not necessarily to be deeper, but definitely you need to look somehow that wave 4 fits into the style of the same degree of wave 2, okay? Or like in our case. So definitely I'm expecting something more complex to unfold here. That's why I'm observing idea of a expanded flat here, or maybe even triangle. Also, the next important thing is that we have a 3 waves to a new high, and here's also an open gap from first French elections results that occurred back 3 weeks back. So actually, we will very rarely see such gaps to stay open. So what I believe it may happen is that we'll see a reversal back to the downside to fill this gap, maybe even lower to make a new spike beneath 2320, like has occurred here at above 24. So actually, I think that we can see some downside pressure, then continuation to the upside. So be aware for more complex wave 4. Definitely, I would not be looking to invest in markets at such high levels, okay? But the short-term charts, however, suggest that we may see another push to the upside, but maybe a final one, because we have here wave 1, 2, then we have an extended wave 3. More importantly, a recent pullback was made in 3 waves. It looks corrective, so watch out for another maybe final spike to new high, and then market may turn lower, okay? As I said, into wave C of a wave 4 of a flat. Also, the next market that we can take a look is New Zealand dollar against the US dollar. Now on the weekly chart, it's not a very clear pattern, but what I believe is going on is that this decline was impulsive, so current rise looks corrective. You cannot count this in the 5 waves, which means it's either ABC or it's an ABCX ABC pattern in progress, which means that upside is going to be limited. And so far we have seen nice reversal down. We were looking here for a leading diagonal. It's a pattern actually that can occur in wave 1 or wave A position where overlaps are occurred. It's very similar to an ending diagonal. The only difference is that this is a starting, this is a pattern that represents a start of a trend where each leg should look impulsive, while in ending diagonal, as you know, the structure is in 3 waves of each leg because structure is much slower, not so sharp like here in leading diagonals. So actually that's a wave 1. I labeled then a sharp wave 2. And more importantly, we have seen a 5 wave drop from this high. Sorry. From this high, and also took this trend line connected from September lows. So I think that this trend line could be retested, and then and then look for a reversal to the downside. As I said, we have 5 waves down. We know what it means. After every 5 waves, market should make a 3-wave bounce. So the 4-hour chart suggests that we may see move to the upside. Also, there is a potential to count this as an ending diagonal in 5th wave. Maybe already finished right there after today's rise. So watch out for a 3-wave rally. If I mark this real quick. ABC, okay, so watch out for an ABC retracement. Resistance would be either at this wave 2 or this wave 4 area, so watch out on this box to be triggered and then turn to the downside. So a 3-wave recovery could be unfolding, but any recovery I think that could be temporary and part of this downtrend that I'm expecting it to resume, okay, especially if dollar index will bounce to the upside into wave 5 as I showed you earlier. Now take a look on Euro Pound. Euro Pound weekly chart is very interesting. We have seen a nice turn to the downside from October of last year, clearly in 5 waves, and since then we are just consolidating, no real strong moves, but in the near future we may see some moves to the downside in impulsive fashion, since I believe that wave C will show up. On a daily chart, you can see the reason why. I mark this as a wave A drop. Then you have seen a sideways price action, which can be labeled already as a finished triangle, A, B, C, D, E pattern in wave B. And now then following next leg down, we have seen a reversal, which could be a 3-wave bounce now unfolding. Here on the 4-hour chart, I'm looking for wave 2, wave A, then you have seen a wave B. Notice how this red wave B retraced for 61.8%. Also, it filled the gap. Always those gaps will firstly try to react as a magnet, but then once they are filled, market will move in the opposite direction, because here were a lot of unfilled orders, and that's the reason why this zone matters, okay? Because when prices will reach this zone, orders will be executed and new change or new reversal trend can occur. So we have seen a nice reversal to the upside. We were looking for a bounce, and so far this has a quality of an impulsive pattern. So ideally we are in a wave C of wave 4, of wave 2. And as you know, when you are tracking a correction of a higher degree, you should pay attention to the 4th wave of a lesser degree, and this is right there at 0.8590, around there. So this zone can be triggered before market can reverse to the downside. Also, there is 100% equality of this wave B, which comes in around this level. So it's also very important. Also, I can add some fib levels here. 61.8% retracement is, as you know, very, very important. So we can see that all levels are right there. Okay, I will remove this one because we don't need it anymore. So pay attention to these levels. We may see retested then turn to the downside. Actually, if this will prove correct, then we'll see more upside, and definitely Euro could see a new high, a retest of this 1.1 level. Okay. Also here we have this hourly chart. Actually, this could be labeled as a 5-wave movement for wave 1. So either we are now in a wave 2 going more complex, or maybe already finished. But in either case, I think that we will see more upside after this upper channel resistance lines will be broken, while short-term invalidation level should be here. Okay. Right there. So as long as this level holds, I expect higher levels to be seen. Okay. And now let's take a look on which market. Which market is very interesting. We can take a look on Euro Yen. Okay, on Euro Yen, we expected to move to the upside, and we have seen this pretty strong rise now after this gap. And it looks like that there is more upside coming in the very near term, but notice that we are tracking a 5-wave rally from this April lows, we have seen an extended wave 1, then wave 3, wave 4, and now we are in a new high. Also, there's a very strong divergence here. So I think that the upside could be potentially limited around 126. Be aware of a free wave pullback. Definitely, I would not looking to buy, to go long into this market at this stage, because it can be very late. We have seen almost 1,000 pips rally in a very short period of time. So definitely, I'm consider a bigger pullback to unfold over the next few days. But waiting on this top formation, as I said, after wave 5 reaches 125.50, maybe up to 126 level. Okay, then we will see a pullback for a wave B and then move to the upside for much higher wave D. That can represent part of a big unfolding triangle here that I'm tracking on Euro Yen weekly chart. Okay, so traders, that's it. Or actually, I wanted to show you what dollar yen. It's not yet. So actually, I will show you dollar yen because I think we have a pretty clear structure here. Almost forgot. So here we have dollar yen. Notice that we clearly made only 3 waves of decline from these January highs. This represents a corrective movement. We have seen a broken channel here. So definitely this fits into a nice bullish resumption pattern, which suggests that this previous decline will be fully retraced. But be aware of a pullback. I think that we may see this wave 2 going to lower levels. I'm identifying this supports at 111.60 to 112.20 levels. So that's my zone where potential bounce could occur after a 3 waves of a pullback. So watch out for this dollar yen. If this dollar yen will start to rally after this wave 2, that's when we'll be also expecting euro dollar to move to the downside in very strong manner, while dollar index would stay in bullish phase for that final fifth wave up on a weekly chart that I showed you. Okay, so traders, thank you very much for your attention. Now, if you're interested in our analysis, please visit our website ew-forecast.com. Check what we have to offer. We are covering this market that you just went through, and some of them even more, like silver, 10-year US notes, German bonds on a daily basis. Okay, so we are looking for those. We also make a lot of video analysis in which we cover, actually made a technical analysis similar like I showed you in this video, also with the educational approach. Also, you have monthly, daily 4-hour chart, and also we have intraday page where we post some important developments on a lower time frame chart that may occur during the day. And also we have some educational pattern that could be very interesting based on shorter term invalidation levels. Okay, so these are powerful, highlighted powerful patterns that we can spot on some shorter term charts. Okay, so traders, thank you very much for your attention, and we will catch you with our new webinar next month. Have a good day. Bye.